All right, buddy. Good Monday morning to all. We're live.
Hello and good day. Welcome to the Crypto Flight Path. It's Monday, April 17th. It's D-Day, or pre-D-Day here in the US. We all know what that means.
What does
Uh,
that mean?
it means taxation is theft day.
Oh God, yeah. Don't. I just spent the weekend doing all that stuff. You do everything you can, right, to get it all right, and then there's always something. Like I was done with this stuff 2 months ago, and you do all of it, and then you forget stuff like and it's always a hassle, and it's like I love the idea that like we have to guess, right? Like guess what you owe us, and if you're wrong, you go to jail. It's like awesome.
Right.
This is this is sweet. Like and the idea of taxes in general. I mean, if you go back, I mean, there's all kind. This could be a. I could talk about this for hours. Like, I don't know why it just can't be a flat 10% tax rate across the board. Like, why is that so hard to achieve? It works. It accomplishes everything, right? And if you make more money, you pay more money because you make more money. It's a higher It's a same percentage, but it's a higher number, right? And so, you know, the solution should be to scale back government spending, right? Like that should be the thing we're doing. But I mean, in all these tax dollars, we've talked about it before. It's not like you send the check in and the pothole in your road gets fixed. Like, that you send it to what do we send it to? The Treasury, and then they basically
Treasury.
burn it, correct?
Yeah. To the best of my knowledge, the Treasury doesn't spend tax receipts. The Treasury has accounts at the Fed, and the Treasury's accounts get marked up like every account can be at the Fed. So this is a whole nother can of worms, by the way. And I didn't mean to get us like off track to what we want to talk about today. But I just yeah.
We can bring it back. We can just say Bitcoin's down a little bit over the weekend. This is normal. We've had a great run up first quarter into the second quarter, and we're pulling back a little bit. I think we're in a range of, what do you think, 28 to 32,000?
Yeah, I'm looking at the 4-hour chart. The RSI is way more oversold than it's been in the last, golly, almost month. I mean, this. If you look at, look at that RSI, the Alpha RSI, and before we got started this morning, I bought some more because the chart says to me, do this. Now, this is not financial advice. Do your own research, trade at your own risk, manage your own risk, know thyself. But I know myself, and I know that I wanted some more Bitcoin sub 30,000. So I LARPed a little more in. And I think what we can expect, and I think everyone should learn, I think one of the most important facets here as you look at markets as they march forward or they march up, is that at some point they have to correct or come back down a little bit, because eventually the exuberance wears off and the buying power or the capital firepower that's supporting the price movement. There's only, even though the central bank can print unlimited money, market participants do not have that capability. And what I'm trying to get at is that eventually you're going to be met with some selling pressure. And I think the signal here is that RSI at the current price, we've come off of what, 30,000 and some change, like 30,300, 30,200. We've pulled all the way back to 29.5 now. This is a massive retracement, and I'm being incredibly sarcastic and facetious here. This incredible, massive pullback to prices not seen just 2 weeks ago or a week ago, and yet the strength indicator is telling us that there's way too much selling pressure at this point, and the RSI has come way back into the, what is it, the 30, is it 30 now? 32?
32, looks like it's 32.92.
Yeah, I mean, if this kind of setup doesn't resonate, then perhaps it's a function of not as much experience, but I'm telling you, from the way my mind is constructed and shaped, and the experience that I've had, is that when you see price holding like it is, in my opinion, this has been in a tight range since those 8 and 9 numbers. Roll the mouse over, if you don't mind, please, sir.
Yeah, no, absolutely.
Roll the mouse over to the TradingView chart where it says the 8 and the 9 at the leftmost side of the range. What are the dates?
Can you see that on there?
Yeah. So what's the date for those candles? Is that like the April 11th?
Yeah, 11th. This is the 4-hour chart. Yeah.
8 days, okay, including this morning, correct? So if you look at the price now, it is
29.538.
Okay, so on the 11th, it was 29.5-ish, and everybody was excited, right? And look, you can tell how excited everyone was because the RSI was way off the chart in the manner of speaking. Yep. And yet price has gone sideways. We had this massive divergence this is just my opinion, this divergence of RSI and price action. So price action hasn't retraced in the same direction and to the same extent that RSI. So what this tells me is that so there's two things going on here. Either I'm a nut job and I'm drunk and I don't know what I'm talking about, but I'm telling you, when price is holding like this, but the RSI has come down, that means it's way oversold, but the price action hasn't followed suit. I mean, and just to be fair to everybody, everybody's bias here, either this is going to puke, or there's a bunch of people that are way, way, way short, and they're going to get liquidated because they're selling the bottom from a strength perspective, like meaning relative strength. So all I'm trying to say is that, in summary, is that after a whole quarter of upward price momentum, breaking through all of these flood barriers and all of this nonsense, and getting to the 30,000, almost 31,000 level in 3.5 months, after plumbing the depths of sub 16,000 and trading sideways here, I would expect a little bit of profit taking, a little bit of short sellers trying to time the market rather than having time in the market, and a bunch of other like interesting confluence and convergence of events where it's not, to me, the trend, as they say, and you read the Turtle Trader or you read other trading things, if we're talking about trading here for a second, the trend is your friend, and we are still in an uptrend. I mean, even Stevie Wonder would probably agree with us here. Give him a Braille chart and he would say, the trend is your friend. And that's what I think is going on right now. And a little bit of profit taking, a little bit of selling, a little bit of aggressive, levered. We're looking for a capitulation to the downside by a bunch of new longs that are inexperienced, and their emotions are going to get the best of them, and they're going to see a couple of red candles, they're going to panic dump, and it's going to help a short seller get paid. But the question at the end of the day is, why at the current RSI, why hasn't the price dumped even further? And I think that gives you a framework for trying to build an understanding of what the market is thinking right now.
No, that's fantastic insight. That is interesting when you look at that, the price in comparison to the different RSIs. We were way overbought, only a few days ago, and now at the same price we're way oversold. So that's an interesting way to kind of look at these markets and get a grasp of where everything is, though. I think that was really great insight there. Let's pop over and take a quick look at Ethereum. In Ethereum, we're post-Shanghai. If you're a Bitcoin maxi, you were wrong. The world didn't end. In fact, price has, Ethereum's enjoyed, a nice move up after the upgrade. So, this is still playing out, but I think overall it was a non-event basically. But you're going to start to see, I think, my assumption is more people will stake Ethereum now because it's been essentially de-risked. And I think the market somewhat agrees with that. What do you think?
I think that in the same way that if you took your US dollars or your other fiat money in whatever country you live in, if you took it to the bank and they offered you a savings product similar to a savings account or a certificate of deposit, for example. If you did that, you went to the bank and said, I'd like to take this 10,000 US dollars and I'd like to put it into the certificate of deposit, and they'll say, we'll pay you an excellent rate of return. And you say to them, when can I, and now what are the rules? How long do I have to have this in here? And if the person at the bank said, well, if you deposit this money into this product, this CD, for example, we don't know when you'll be able to withdraw it. We don't know what the term is, but we'll pay you an excellent rate. You would say to yourself, wait a minute, you want me to give you 10 grand or $10 or 10 million, and you don't know when I'll be able to withdraw it. If, let's say that, or you basically, you can't tell me the term, and you would probably not be interested in that particular financial product. So, and I'm making an analogy here, is that staking, the pre-unlock staking was that you didn't know ahead of time when you were going to be able to unstake your Ethereum, and some people were willing to do that. I contend that, like, there's, like, we haven't seen. I mean, there's always something. There is something new under the sun periodically, and some people were willing to do that. I was not, and I don't think you were either. But I don't want to speak for you in this case.
Nope.
And all I'm trying to say is paint a picture here, is that if you were gonna, in the US dollar fiat world, so to speak, the equivalent of staking is to put your money into a locked product like a certificate of deposit that has a term, say 24 months, and then you can unlock it. But during that time, you're being paid. In staking world, in crypto land, staking is a similar thing in my mind. I could be 100% wrong, but that's the way I make sense of it. Is that now? So now we're past this whole like unlock, upgrade, Shapella, Shanghai thing, whatever it was called. And what I think a lot of people tried, or I think there was some bandwagoning, in my opinion. This is just my like doomsday, like glass half empty opinion of humanity sometimes, based on too much time on Twitter. But there's a lot of basically doom and gloom sells, and so it was just the path of least resistance for people to talk negatively about this. Oh, the market's going to dump, but blah blah blah, or whatever nasty thing people put in there. But the point I'm trying to illustrate simply is that I think the market priced in, by virtue of the price going higher here, into and out of this, like the biggest or the most important thing that needed to happen was that the network a change had to be made to the network globally, which is a big deal. If you've ever worked in software, you understand how difficult it is sometimes to make upgrades to things that are out in the wild. And just like with the consensus mechanism change from proof of work to proof of stake, that went without a hitch, a nothing burger. Ask anyone, no matter which side of the fence they're on, it was a non-event. People made a bunch of hubbub about it ahead of time. It went smoothly, and then people moved on to the next thing, because that's human nature. And if you ask anybody about it now, they'll do whatever. But my point, really, to get down to it, is that the market priced in that this was going to be successful, and it was. And I think you'll get some short-term unstaking and perhaps some aggressive attempts at selling this market, meaning people speculating heavily that it's going to pull back substantially. I think they're probably going to be wrong. But in contrast to the Bitcoin chart, I think that the RSI is coming back to about the middle area here. Yet price is still sideways effectively for the last 2 weeks or a week and a half. And I think you're seeing a lot of people making some decisions around whether or not, or how much Ethereum they're going to stake. How much do I need to buy? Do I want to wait until, so a question you might ask yourself is, do I wait for a pullback to add to my Ethereum position and then take some of that and stake it? Or do I just, go all in, or do I take a position now and stake that? And I think the pricing of the asset is a reflection of that. This is overall quite positive, and it's only going to bring more capital that's been sitting on the sidelines into the market. So I think that the overall trend will continue higher. And quite frankly, I think we're in a position where the risk reward is still favorable to the upside. There's macro tailwinds in a manner of speaking. And I think a lot of institutional types that are looking for quote unquote productive assets that generate yield they're gonna look at other crypto that's more like a growth stock that doesn't pay a dividend in a manner of speaking, and they're going to make the comparison, in my opinion, because that's the comparison that I'm making, is that why would I speculate and try and trade some weird AI token that I don't know anything about and I don't have any visibility or understanding, and there's a lot of dumb money rushing into these things and getting clobbered, when I could take the same capital, put it to work in Ethereum, stake it, know that I can unstake it, manage my risk accordingly, and earn X% without having to sweat and lose sleep at night. That's what I think.
Yeah, and I think when you think about the people that did stake their Ethereum before the upgrade, these were people that, had conviction in the asset and most likely weren't going to sell anyway. So if you just take a logical point of view of this and look at it from that angle, again, I think it's been a non-event but net positive, right? I think long term it'll be extremely positive, and to the comments that you said, I agree. I mean, I think you're going to see money come into Ethereum because it's going to be labeled a productive asset, and there's other things too that Wall Street looks at, but I think overall it's been a net positive. So on that note, let's switch over real quick and talk about the economic calendar and what we have coming up this week. If there's anything that jumps out at you that's important, that may affect what's going on in thase markets.
So today being the 17th, one of the things that before I dive into any one of these things or just overall, housing in the U.S. So this is a big week for the U.S. For as far as the economic calendar is concerned, all things housing and So there's the New York Empire State Manufacturing Index is something that when I worked at the fund, we paid attention to things domestic, all things domestic around manufacturing and housing. And for example, we paid attention to Lowe's and Home Depot and Public Storage stocks to see how they were performing, or basically what I'm trying to say there is that the stocks being future looking instruments, what were stocks pricing in? What were they telling us, or were they trying to tell us with their price about what's going to happen in the future, a quarter out, half a year out? So when there's a housing boom, you'll see things like Home Depot, Lowe's, Public Storage stocks, and you'll see lumber futures go up because the market starts to price in all of this wall of spending that's going to come. Because quite frankly, when you buy a house, you're basically signing up to buy a metric ton of crap and to spend like a maniac on things. It's just real life, and that's why housing is considered, in my opinion, to be a really good thing for when things are going well. Housing is it's a boon. Basically, people buying houses is a good thing. It's a forward-looking indicator that the economy, there will be lots of liquidity in the economy. People will be spending a lot of money. Now, where that money comes from, whether it's credit or it's cash that people have been saving, is a whole nother can of worms. But what we're looking at this week is there's the New York Empire State Manufacturing Index is something people pay attention to. And then the building permits leading into what the mortgage rate, and obviously the cost of capital to buy homes and get your 30-year fixed is a big deal. So when mortgage rates are quote unquote expensive, although we are a species with amnesia now, and I say that to talk about, in decades past, when you were buying a home, you were paying anywhere between 8 and 20% interest, but you weren't paying the premium in terms of raw price for a home. For example, my folks bought their house in 1968. They paid a whopping $30,000, which is less than I put down on the house I live in now, and that as a down payment. And the point I'm trying to make is that they paid 17% interest on their $30,000 mortgage. Now, we've seen home prices balloon to 10 times or 15 times that for the same, roughly the same square foot and roughly the same, like the same thing that you got 25 years ago in terms of like raw living space and amenities, you're paying 10, 12 times for today. And yeah, you've got newer building materials and all that, but at the end of the day, the housing price inflation has been possible because of ZIRP, zero interest rate policy, low interest rate policy. And for the last 12 years or so, we've benefited from that. So now people seeing a 6% mortgage or a 7% mortgage are climbing the walls, feeling like they're in the sane asylum. But the reality is that it's still dirt cheap to buy housing. So, but in the short term, what you need to be concerned about here is that if the cost of mortgages is coming down, that means that consumers who aren't macroeconomists and are not economists in general, they're concerned about the here and now today. What is it going to cost me to buy this house? Then if mortgage, and then this is a follow-on, there's a follow-on effect. You can't roll out tomorrow and buy a house because mortgage rates came down a percentage point. It's still like a 3-month ordeal to find a house, make an offer, get approved, do the closing, all that stuff, and then the money lands on the other side. So what I'm trying to say is take some of these things with a grain of salt, like in terms of manufacturing and housing. But I think what happens here, and to sum it up, is that as we get into this week, we'll get a window into like some manufacturing data, like what's the manufacturing landscape look like here from a productivity standpoint, and the productivity part is the key. And secondary to that, as far as like this suppressed recently because of interest rates being driven so high so quickly, there's been a lot of FUD in the housing market. But I'm telling you, people are still buying houses. They're just paying more. They're putting down less. But that still is going to, that the spending that comes still is going to come. So I don't think we're in dire straits. And then last but not least, if you scroll down just a hair, we get some unemployment data, some more Philly Fed manufacturing, and it looks like a couple of Fed talking heads. So this is interesting timing. And the last thing on this, the Walker, Bowman, and Cook, and all of these other Fed talking head types, the Fed governors, have had these speeches scheduled for weeks, if not months. So, but I'm telling you, like, the time is a flat circle, and the thing I'm driving toward here is that we have the debt. I took my dearly beloved out for some barbecue last night to celebrate her birthday a little bit early, and I did the best I could to not be inundated by the 5 TV screens that were on the wall. But all it was CNN, Fox, blah, blah, blah. And every single one of them was programming our society en masse to be concerned about the debt ceiling debate coming this week. And that's what I messaged you about, was get ready, because the millions and millions of people are going to be programmed this week to be afraid of the debt ceiling. All of a sudden, we need to be afraid of the debt now. At first, we were afraid of COVID, and then we were afraid of our neighbors, and now we're afraid of the Ukraine war, and now we're afraid of the debt ceiling, and then here we go, and we're just on the FUD merry-go-round, and the debt ceiling will get raised. More government spending will come, or will continue, and that's the key there, is that the debt ceiling doesn't get raised necessarily because they need to pay. I mean, yes, they need to pay interest on the debt, but the real down to brass tacks issue is that there's a lot of government spending that contributes to payrolls, and that is not going to get nothing's going to change about that. So anyway, that's my.
No, I think that was great analysis, and I appreciate that. That's super helpful. As you explain this stuff, I pick up more every time. And I think it's important, and we talk about all the time, all this stuff isn't going to make sense at first, but over time, if you just stick with it, it starts to make more and more sense every time you look at it, right? And so you can kind of do it in the background of your life and just sort of pay attention to it. And over, a period of weeks, months, years, all this stuff, it starts to make sense. But the debt ceiling thing is funny to me. Why do they even have a ceiling? It's strange to me that they even have a ceiling for this. They're just going to spend whatever they want to spend. It's supposedly, you're going to see people push back against this, but I don't know enough about this to really speak intelligently. I assume they're going to raise it again, right? But you know,
rest assured, it's going to get raised, because if they don't, the consequence. I mean, I'll tell you why this debate exists, and it's as old as time and people ourselves. Is that it's another point of leverage that either party can use, and it's just we never in Washington, you never talk about the solutions to things, or you never talk about the actual issue. You're always talking about some fringe element. This is just my awful opinion of this, and I grew up in that area and moved away 10 years ago because I couldn't stand it anymore. The saying is, you never, like in consulting, there's all of the money in consulting is made in prolonging the problem, and in politics is nothing but consulting, in my opinion. So there's never good money in solving problems. It's just prolonging them and having wide spectrum debate from we have to get everyone to chime in on this, and all it does is keep us distracted. Our emotions get in the way of our rational decision making and thinking, and the problem doesn't go away. It just anyway. That's
no, I hear you, man. It's
sound like a negative Nancy, but
no. I mean, there's negativity and then there's reality. I mean, it sounds like you're speaking in reality. I've got a tweet pulled up from TED Talks Macro, and this is a great account to follow for this kind of information, right? He does a great job outlining this stuff in detail. So if we want to, if you're listening to this and this is something you want to pay attention to, this is a great account to follow. Something interesting here, that we didn't cover. It sounds like Tuesday, you're going to have some Chinese data. So risk-sensitive currencies and possibly crypto could react to Chinese data. Chinese GDP growth is expected to rebound, and that should spark some optimism about the global economy in the short term. So, these are just things that are going on outside of the U.S. as well. That you should probably pay attention to and just have on your radar. Is there anything that jumps out at you, Ted, with this tweet?
The Chinese data is probably the most significant, and the reason I pick on the Chinese data here is that the POC are really, really good at injecting substantial amounts of money or liquidity into their financial system. And what does that mean? It simply means that they inject lots of liquidity into their economy, into their system, which facilitates spending globally. And that means that the rising tide of liquidity is going to lift all boats. So from a global availability of capital perspective, in my mind, is that, and I'm really grateful, I forget who explained it to me like this, but it made sense, is that when liquidity shows up in the short term and assets and companies haven't really developed anything new, like Google hasn't added net 10 million more subscribers in like the last 2 weeks, for example, or Netflix didn't double their revenue in the last quarter. But the point I'm trying to get to is that all of a sudden all of this excess liquidity comes in the system. It needs to land somewhere, and then people who are borrowing it or receiving it need to put it somewhere. What do? They put it into assets, because they understand, I'm talking about the big players here, they understand that you don't hold cash when cash is abundant, okay? The saying from Wall Street, cash is trash. If you're not invested in the S&P 500, you're missing out on 10%. That's why they will discount your cash flow by 10%, et cetera, et cetera. The point I'm trying to get to is simply this, because we are a globalized world and so much complexity in the way we are trading between ourselves as nations, and all of the money that flows, look at Forex volumes daily. It's like 5 trillion daily traded in Forex land. Okay, the point is that when the Chinese inject liquidity, they do it bigly. Okay, they don't do things small. They're 4 times our population here. India is another one that, as soon as they start to play in the global economy in the way that China can, unbelievable things will happen. What I'm trying to say is that all this excess liquidity is going to come into the system, and this optimism. So what happened? Liquidity shows up, optimism shows up, exuberance shows up, and you'll see asset prices start to lift. And the way to, but your monetary value is your purchasing power goes down because of all this excess liquidity. So how do you? You don't need, like saying, you don't need to know how the watch is, what time it is that you should be, in my opinion, looking at where places to park your cash in assets that are going to benefit from the excess liquidity that's going to be available and all this optimism. So now the pendulum is going to start to swing the other way, like steering the aircraft carrier. We went from, holy crap, the world is ending, our supply chains are broken, COVID, you're all going to die if you buy Bitcoin. And we're going to start swinging the other way. And all of a sudden it's like, oh, well, we're rebounding. Our GDP is going to benefit because people are spending more money. They're buying more products. There's more jobs available. And check the timing. We have a presidential election next year in the US. Check the timing. Interest rates are like at probably close to the peak where they can effectively like actually be raised to without really messing things up. Check the timing. We've got a debt ceiling, and we've got all of these. We've got the defense. Let me tell you this: the $800 billion defense budget is going to get funded in the U.S. There's no like death and taxes. You can rest assured that that's going to pass and get funded. So I'm just saying, there's all of this wall of capital is coming, and liquidity is the better word. It's coming not just here but around the world, and it's going to propel us. And it's hard to see from one day to the next, because if you plug into the wrong things, you just get pounded. And the big boys and girls are waiting for us retail nerds to capitulate, get scared, and sell our crap to them at discount prices. I forget what the financial guy that my mother, may she rest in peace, she used to use this guy, I forget his name, whatever. He used to talk about Filene's bargain basement to compare stocks that were like excellent values but were discounted heavily. And that was my like as a younger person, I didn't understand that, but I've never forgotten it. And now that I've seen this play out over the last 15 years, it makes sense to me now. So anyway, that's what I think.
No, I appreciate that. That's great. And then you also coinciding with the Bitcoin halving coming in basically a year in April of 2024. So there's a confluence of events that would seem to be positive for asset prices. And so that's separate from positive for the world, but positive for asset prices. So that's something that we can look forward to. And the last thing I wanted to kind of bring up, I just thought this was interesting. I think you sent this to me last night. It says SEC Chair Gensler could soon be out of a job after drawing the ire of a U.S. rep over his long series of abuses against the crypto space. So, it sounds like Gensler is catching a little bit of flack, and I know that he's gotten flack from even members inside of his own committee, that are offering dissenting opinions. So,
that's right.
This is just neither here nor there. It's just interesting, right? Who knows? Cointelegraph, is Gensler really at risk of losing his job? I don't know, but
I think it points out a couple of interesting things, which you highlighted. One was that there's Hester Peirce is she the commissioner?
I'm not sure what her title is.
SEC Commissioner Hester Peirce, known as Crypto Mom for her pro-crypto positions. I'm quoting from one of the paragraphs here. Basically, she's offered some criticism for some new proposed quote-unquote rule amendments, declaring, and I quote, stagnation, centralization, expatriation, and extinction are the watchwords of the latest move by the SEC. So she's publicly talking, or she's publicly expressing an opinion that contradicts, or is not, basically she's not towing the party line inside, and she's not playing the politics in the right direction, according to Gensler. If you want my opinion is that she somehow is able to get away. I don't know how this is possible, quite frankly, having lived and worked in Washington and understanding how political and how just stupid some of the things are. I don't know how she gets away with this, but I don't know what I don't know. But the point I'm trying to illustrate is that you have Warren Davidson now. Oh, he's he obviously has enough ammunition, in my opinion, to legislate. And I'm not talking just recommend that somebody be removed from office. We're talking about like with the legislative pen and the legislative apparatus and all of the things that have to happen in order to write legislation to quote unquote kick them out. Now, what if he's just saber rattling? I'm going to go after Gensler, and the best and the easiest and lowest hanging fruit is for me to write a tweet about I'm introducing legislation that removes Gensler, blah blah blah, and here's why. I think if that's what it's going to take, and they have all of the right ammunition and the right cards, or what's the saying? They have all the right things in their corner, or all the right stuff, then I don't necessarily disagree. I was like, previous years, Michael Saylor talking about how sensible regulation and getting the SEC on board was a positive. I agree with that. But what you have now is a case where, and you don't have to be a rocket scientist to figure this out, is the picking on Kraken, picking on Coinbase, but completely missing the FTX thing. And I think the house of cards there's a little bit of a breeze whipping up. And if the SEC's enforcement actions and behaviors are a house of cards, then it is likely that they topple very quickly because these people are not experts necessarily in doing or creating these. What's the word I'm looking for? I'm saying Gensler is not an evil mastermind, okay, in my opinion. I'm not an evil. I wouldn't know how to architect this. I'd say SBF's an evil mastermind, but he's not the SEC chair. You know what I mean? So I don't think the SEC chairs, Genslers and the Yellens of the world, these evil masterminds necessarily. I think they know the right people. They did the right things to get into these positions that, quite frankly, I wouldn't want either of those jobs, because you get it from both sides. Anyway, that's mine.
Yeah, no, again, we have to pay attention to this stuff because it's relevant to our industry, right? And, talking about political appointees and members of committees, look, unfortunately, you have to pay attention to it. Is it fun? Does any of this stuff make sense to most people? Probably not. And not that it's complicated, it's just that it's boring, right? Who really cares unless, what you would want and what's reasonable to expect from your government is reasonable legislation and to work with a developing industry, not outright abuse, right? And so I think it all goes back to these guys get their marching orders from somewhere. That somewhere is probably very well connected to donations and money, and you've got banks that are falling behind tech-wise, and they're trying to buy time. And I think that's all that this is, truthfully, or a big part of it at least. So anyway, with that, we can kind of wrap it up for today. Ted, do you have any other things to say?
In terms of the economic calendar, just we're looking for signs of strength, or people returning back to the housing market, buying power coming back to the market slowly. I think that if we get any whiffs of that, the Wall Street and financial media may start, the narrative may change a little bit about this. I think this, where I'm going with this is that we've seen some headlines. Again, people already forgotten about the headlines from 2 months ago. Our new headlines are here now. The new things we need to be scared of. But this mild recession thing that has been tossed about, and people largely forget that Brian Moynihan was talking about massive recession later on, and that Bank of America would never get involved in crypto, and yet Bank of America is one of MicroStrategy's biggest shareholders, along with some other big bank that isn't allowed to, politically, because they're afraid and they don't want to trigger a mass exodus of big institutional customers to go somewhere else, because they can't, like the Raymond Jameses of the world, who just flat out will tell you that they will never, at least today, they will never touch anything crypto related because they are terrified of the reputation risk, and that's all it is. And then So
I watched Jamie Dimon. I think it was at Davos. There was a clip where he was asked about Bitcoin, and what was interesting to me about it is he was clearly frustrated, and so he basically said it's garbage, it's crap, it's a joke. But look, these emotions of frustration, and they don't come out of nowhere, right? Like there's a reason he is, right? And so I guarantee you they wish they just didn't have to deal with it, but they do. And so I think eventually where it goes is, again, when you talk about game theory of Bitcoin, they're going to have to participate one way or the other. And if you don't, you miss out, right? And so we'll see where it goes. It's interesting. I think you'll see more of the Fidelities, the Bank of Americas, lost Ted, of the world. I think you'll see more of those start to participate in the Bitcoin and crypto markets as time goes by. But with that said, I think it's a good place to wrap it up for today. And as always, do your own research. None of what Ted and I say is financial advice. It's important that you guys pay attention, and if you make trades or make investments in the crypto space, do so at your own risk. Don't go crazy. Take educated risk. Don't put all of your portfolio into a coin you just heard about on Twitter. Don't do any of that crazy stuff. But if you do this slowly over time and learn about it,